Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. So we have explosive start of the week. You can see that although on Monday was a holiday in Europe, right in the beginning of the week we have the explosive upward action and trading plan that we discussed in the weekend, especially on Friday, has been completed here. It's difficult to say what was the reason. Mass media appeals to rumors of the possible firing of the Jerome Powell, but I wouldn't treat this event as a possible reason for the recent rally just because this information was known even on Friday evening, and we have posted in the Telegram channel. Hardly this was the reason, as well as the death of the Pope, so it's also hardly this was the reason. My suggestion is this is just new money inflows with the major market narrative that stands on the market currently. Dollars becoming weaker, confidence in the United States dollar and the government decreasing, and more investors joining to this trend. And that triggers the upward continuation in the euro. This is just increasing of the stream of those who follow this new strategy. It's becoming more massive character. So I think that this is the major reason for that, but not some particular events that has been announced in the broadcast media. So whatever it is, currently you could see that market mostly has completed the targets that we have specified. This is a 15-15-30, and you will see a bit later on the hourly chart that even XOP target of our hand shoulders pattern has been completed. What we could do currently, so considering the new targets on the daily chart here, it makes no big sense, because based on the same ABCD pattern, the XOP will be around 1925. This makes no sense just because we have the monthly OP around 90 even. So from that standpoint of view, we already have monthly OP target. We do not need almost the same daily pattern and daily target. So currently we probably should focus on something near standing, and today particular I would watching for a minor bounce. Once again, by taking a look at the daily chart, you could see that this area might be treated as a floor for current performance, and probably we could use this area as a signal line that could tell you whether the market still stands with this short-term upward tendency, or it turns to the bigger scale. So if you will see that market erasing the last upward action, dropping below this area, it means that the bigger scale retracement starts, and we start to consider, so we also have to increase the scale, so which will be probably some first leg, and then will be deep retracement and so on. But for now, based on the situation that I see on the lower time frames, it's not time yet to think about the big collapse. So currently today we will be watching only on the technical intraday pullback and trying to establish the new targets to the upside. But first I would like to show you a couple of charts. This is as usual dollar index and 10-year bonds. So this particular weekly chart of the dollar index, you could see that straightforward breakout of the 100 level, which was very important for the market while standing here for the 3 years. And in general, this area previously was very important. If you'll take a look at the historical chart here. Now market is going to the downside ABCD target, which is around 95. I suspect the 95 is approximately agrees with our monthly target on the euro, which stands around 119, 120. So this is the potential destination point that dollar will try to reach. On the 10-year bonds, everything not stands very calm, very quiet. So take a look also at the monthly chart, and you can see that after a strong rally on the yields starting in 2020, market turns to the triangle consolidation. This is all-time 30% resistance level, 625. I suspect that this in general is a consolidation pattern. This is not bearish reversal pattern. Usually market starts forming triangle when it's preparing for something on some continuation. And that particular might be the period where we will see that 10-year yields will consolidate in some area between the around 4%, between 4 and 4.5 probably. But later, the action to the 625 is really could happen. So that's potentially it's very big numbers, and it will be they will be backed definitely with some really revolutionary events in the economy, as in the United States, probably in the global economy. So that's very important. Now on the intraday charts, what we have on the 4 different chart. That's our butterfly breakout of the triangle. Here's doubts of the grabber. You can see had been confirmed. Indeed, this grabber hasn't worked, and I warned you that we don't have it on the futures chart, so be skeptic about it. And we have the acceleration right to the 1530 butterfly target. Now, here we have 4-hour time frame grabber, but currently, well, be careful with this because market stands at strong overbought area. And the deep retracement here is still possible. So if you would like to trade, do not rely only on this pattern, although it looks really nice. Next upside target that I think that we could consider is 116. Market could reach it because the previous top stands 1580. It's just 20 pips difference. I don't think that will be a problem even for a overbought market. Acceleration to the 127 extension butterfly was really significant. So all this stuff makes possible for the further continuation to this level. What the particular patterns might be formed. First of all, if grabber still will be formed and will work, I wouldn't exclude here the appearing of the minor butterfly pattern. So it might be something like this. Although risk of deep retracement seems significant because the reaction on the major events happened, and market needs time to some relaxation. You can see 127 perfectly agrees with the 116 target. So here's maybe the minor butterfly to be formed if, as I said, grabber will be formed. Conversely, if we still will get deeper retracement here, we could consider 30-minute chart or hourly chart, what you likes more. We could get the ABCD pattern down. So first level to watch for OP around 114.54 agreement with the first fib level. Next one will be XOP around 113.80. I am not excluding the XOP mostly because of the same overbought situation. Deep retracement on the hourly chart is quite possible. This is not the big scale. Also take a look that XOP agrees with the neckline of our hand shoulders pattern that we were trading last week. And take a look how everything has happened. So once we identified the failure of this minor hand shoulders, we said be prepared for upper prediction. We talked about the Polish grabber here. So that was our entry area for a position. And you can see what has happened. This was the OP of these big head and shoulders that we were considering. The market finally has reached the XOP. Now it stands with this ABCD retracement. So if you plot here additional fib levels from this reaction point, I think that one and this one are important because this the reaction point where the upper prediction precisely has started, and that is the starting of this week. So you can see market opened with a gap down and immediately starts rising. So these two reaction points are important. If you plot the fib levels, you will get the confidence support around the OP area, around 1450 area. So what the strategy we could follow? Well, most aggressive tactics, I would suppose, is trying to possess yourself with the butterfly, with the stops and invalidation point right below the B point. So you could, for instance, those of you who would like to do this, do not risk too much, and use maybe 30% of your trading lot, usual trading lot, maybe 30-40%. So if somehow market will drop, you have the option either do nothing, just close on a stop order, or you could place your initial stop below this agreement. Why it might be useful? This area more or less strong, and on the first touch of this area you could get the bounce, so that it could let you to out of this potential losing trade with the break even or even with some profit. Simultaneously, you will be able to see what will happen here. So for example, we can't exclude that market could reestablish upward direction right from this level. So this is some ideas for today's trading. Speaking about the XOP, I would treat this area as most conservative. So if you do not like to risk, you prefer to take the positions on a strong level with a deeper retracement, you could just watch for this level. Chance exists that you will miss probably the trade here because the retracement relatively deep, but if it will happen, that might be a really good entry opportunity with a great potential, because if we suggest 116 as a target, entry around 113 or 114 is almost 2 points profit on the market, so it's really significant. So that ends towards what we have. Overall context remain bullish, but here we need to keep an eye on retracement process that we have on intraday charts.